session of Buy or Buy, What Should an Investor Do? My name is Shoaib Zaman. I'll be your moderator for today's session. I would like to introduce today's presenter for the session, Mr. Hariharan. He has over 12 years of experience in financial services industry across sales management and training. He has conducted more than 800 training sessions on equity, debt, macroeconomics, etc. for more than 20,000 mutual fund distributors. He has also conducted over 350 workshops on financial planning, goal planning, retirement planning for families across the country. More than 30,000 investors have attended this session and benefited from it. Mr. Hariharan is also the author for Money Money, a book that explains investment through short stories. For those of you just joining us, welcome to today's session of Buy or Buy, What Should an Investor Do by Mr. Hariharan. Without waiting much, let me hand over the session to him. Over to you, Hari.
Thanks, Shoaib. Let me just share my presentation. Okay, I hope it's visible.
Yes, it is visible.
Okay, thanks. So good morning all. Welcome all of you to this session which is titled Buy or Buy, What Should Investors Do? So if you look at it, both buy or buy, it's pronounced the same way, but of course the spelling is different. The interpretation is very different. The meaning is very different, especially when it comes to investments, right? So all of us have been investing in mutual funds, maybe stocks, various asset classes. And I'm sure all of you also are aware of the fact that markets are at very high levels. And therefore, we thought that, let's try and address some of the common questions that a lot of investors have been coming back to us. And these are some of the common questions that people have come back given the current market environment. So people have seen markets have rallied substantially. Markets are touching new highs almost every other day. And therefore, the mood question that comes to everybody's mind is, should I book profits? What will happen to the markets? Will the markets go up? Bazaar niche aayega? My SIPs are continuing. What should I do? Should I continue with my SIPs or not? So these are very common questions that are coming up with a lot of investors. So we thought this is a nice platform to address some of these questions and maybe help a lot of investors, take the right decision. Right. Before I get into the session, let me ask a very simple question. And my very simple request to all of you is that I will ask 2 or 3 questions throughout the session. There's a chat option that's available. Please respond back on the chat with your the replies. Let's keep it participative so that you also and me also both enjoy the session, right? So the first question is for all of you. You can put it in the chat. The question is, what do you think has been the performance of Sensex and Nifty in the calendar year 2020, which means from January 2020 to December 2020? You've got 4 options. You don't have to type the numbers. Just select the options A, B, C, or D. Just type A, B, C, or D. तो सवाल ये है कि आपके हिसाब से जनवरी 2020 से लेकर दिसंबर 2020 तक सेंसेक्स और निफ्टी ने कितने रिटर्न्स दिए हैं? आपके पास 4 ऑप्शंस हैं. आप कोई भी ऑप्शन सेलेक्ट कर सकते हो जो आपको लगता है सही है. ठीक है. I will wait for few seconds and then Shoaib will guide me in terms of what is the response. So Shoaib will wait for a few seconds, maybe about 30 seconds.
So the answer, there are various answers coming: C, C, D,
okay.
D,
okay.
C, A, C, C, D, B,
B, okay.
B, again C, D.
Okay.
So reasonably many people are choosing option C.
Okay.
Some people have also chosen option D. There are few who have selected option A, and some people have very few people have selected B.
Okay, great. Thanks, Shoaib. And as expected, this is quite expected in terms of the responses. So many of you have selected option C, many of you have also selected option D, right? Few people have also selected option A. Let's understand this. I will disclose the answer in my next slide. Let's understand this. And there's a reason why people have selected option C and option D, right? Now, what is the reason? Now, please let us understand. In the market, we need to clearly differentiate between the noise versus the information. Now, many of the responses that have come with option C, which is 28, 30%, or even with option D, which is 75, 80% kind of returns, has to do a lot with what we have been hearing every day, right? और बाजार में क्या चल रहा है? सब लोग यही बोल रहे हैं कि बाजार तेजी पे है. Markets have reached 48,000 levels and almost on the verge of 50,000. November, people started talking of 41, 42, 43, 44. So every time people have been only talking about बाजार तेजी में है, बहुत महंगा हो गया है, वैल्यूएशन बहुत ज्यादा हो गए हैं, etc. etc. And people everywhere in media, social media have been saying markets have rallied by 70, 80, 90, 70, 80, 85%. So this somewhere has got registered inside our mind. And therefore, a lot of people have selected option C and option D has to do with this noise. Okay, while this is true, that markets have bounced back by almost 84%, it's absolutely true. But let us also look at the other end, which is actually something which a lot of people miss. And what is it? If you actually look at it, the calendar year returns from January to December 2020 is about 15 to 16%, and which some of you have already selected as the right option. That was the correct option. Okay. Now let's see what has happened. Okay, to put things in perspective, let's take a very simple example. Assuming कि आपने 100 रुपए निवेश किए थे on 1st of January 2020. So COVID things were there already, but Feb also nothing happened. March, suddenly market started falling. 23rd of March precisely, market came to a very low level. On that day, this 100 rupees became 62 rupees, which means a loss of 38 rupees, which is 38%, right? Then over the next couple of months, slowly the market started going up. And then we had this phenomenal rally on the market, and it bounced back by 84%. Now this 84% is on 62 rupees. Okay, so 62 has increased by 84%, so that becomes 115 rupees. So net, your 100 rupees starting 1st January 2020 on 31st December 2020 became 115 rupees. So 15% returns, right? So 84% भी था, लेकिन वो bounce back था, rally था, right? And this is not something new. Whenever markets have corrected substantially in the past, you have always seen in the immediate 6 months, 12-month period, markets have always bounced back by 50, 60, 70, 80%. So it's nothing new that has happened in the markets, right? So effectively, it is 15, 16% kind of returns. Now tell me, as an equity investor, क्या हम इतना भी उम्मीद नहीं रखते हैं कि बाजार 12% का 14% का रिटर्न दे? It is expected, right? So instead of 12, 14, we have got 15, 16. So these kind of returns happen in 1 or 2 years, but typically you can expect these kind of returns going forward from a long-term perspective. So therefore, there's nothing to be really concerned or worried about the high valuations, right? Both the numbers are correct, but what you give importance is this to be decided by you. If you give a lot of weightage to that 75, 80, 84% returns, then you will take those assumptions. But if you give importance to 16% returns or 15% returns, you'll say, okay, this was normal return that I was expecting, I have got it. So very important to differentiate between noise and information. All right, let's go ahead. Now tell me again one question to all of you. There are some numbers that you can see, and there are some years also. The bottom is the years, 1980, 90, etc., etc. Then on the top, you see some numbers. I want you to take a guess. कि आपके हिसाब से ये numbers क्या होंगे? What do you think are these numbers? 200, 220, 250, 280. What do you think are these numbers? Just type it in the chat. We'll wait for a few seconds for your responses, and once Shoaib gives me the details, we'll proceed. Shoaib, we can take 30 seconds, no issues.
Sure. Profits, market value,
Okay, profits, market value, okay.
Number of companies,
Okay.
EPS growth,
EPS growth, okay. That's a nice okay.
inflation, raise in
Oh,
mutual fund price, returns in
okay.
percentage,
Mm-hmm.
uh, then number of companies in the market, Sensex,
Okay.
okay. Stock market graph,
Okay. Okay.
investors added,
Oh, that's quite innovative. Okay.
yes,
Okay. Thanks, Shoaib. Thanks, people, for participating. So let me tell you, these numbers have nothing to do with financial markets. This has nothing to do with Sensex, nothing to do with index, nothing to do with Nifty, nothing to do with mutual funds. Okay. This has to do with our favorite cricket. Okay. All of us, I'm sure, are followers of cricket. So what this graph is essentially showing is that if you look at different decades, this 1980, 1990, especially the one-day international matches, the average score was about 200 to 220. So if I'm a team which is batting first, if I score 200 to 220, this was considered to be a good score to defend in 1980, 1990s. Okay. Then in 91, 2000, this average score became 220, 250. So if I don't score 240, 250 kind of scores batting first, then my chances of winning are less. 2001, 2010, this increased again to 250, 270, 280 kind of averages. And in 2011-20, we have seen that this has gone to 280, 300, 320. I'm sure all of you watch cricket quite closely, and you might also remember that there have been matches where teams have scored more than 400, and those have also been successfully chased by the second team. So which means what was considered to be a good batting score 40 years back is no longer a good batting score today. Right? I think we can make a safe assumption here, barring few exceptional matches that will happen, because today most of the matches happen on flat batting tracks, where scores of 280, 300, 320, 350 are also getting chased quite consistent. Now, what has this got to do with investments? We said Sensex and markets have gone up, right? Markets have gone up, no doubt. So Sensex started in 1980 with a value of 100. And this 100 has now become 48,000, almost on the verge of 50,000. And it has taken 41 years in this journey. Of course, there have been corrections in between. So whenever Sensex crossed a milestone, whether it was 10,000, 15,000, 20,000, it was the highest value at that point in time. तो जब उसने 1000 क्रॉस किया तो 1000 सबसे ज्यादा वैल्यू था उसका, तो लोगों को लगता था अभी 1000 हो गया, अब क्या होगा? Then it became 20,000. Then people said, oh, it has now become 20,000. Now what? अब लगता है कि इसके ऊपर नहीं जाएगा. Then 20 became 25, 25 became 30, 30 became 35, and slowly we have seen it has reached almost 50. So again, just like the average scores in one-day matches have kept on increasing, and those scores are no longer considered good scores, historical highs no longer make sense. So today markets have reached 48. Okay, nobody knows where it is going to go. But what I'm trying to say here is that, again, do not give too much significance or importance to 46, 48, whatever. These are important, no doubt about it. But इसी के ऊपर अपना dependency या decision नहीं होना चाहिए. All right. So markets have always surprised us. They will continue to surprise us even in the future. Right. Let's continue with this discussion on cricket in the next slide, and I will try and correlate both of them. So we said market has moved from 100, Sensex moved from 100 to 48,000 over 41 years. Now, in this journey, you will see, let's look at cricket first. Every decade, we saw that the average scores have increased, right? From 200 to 220 to 240, etc., etc. And each of those decades, you would see that there is some batsman who dominated the one-day international scene. So to just give you a couple of examples, in 1970s, ODI matches, the king was Sir Vivian Richards from West Indies, right? Then in 1980s, it was Desmond Haynes, again from West Indies. Then 1990s, we had our own Sachin Tendulkar, who dominated the one-day international matches. 2000s, we had Ricky Ponting from Australia. Again, 2010 to 2000, we had Virat Kohli. So every era had a different set of batsmen who dominated the one-day international scene. and each of these batsmen are very different in their own way, in the way they approach batting, in their skill set, etc., etc. Right? So let's take this forward to investments. We said that markets have moved over the last 41 years, and in these 41 years, there have been quite a few bull runs, okay, where markets तेजी पे थे काफी समय. तो ऐसे कुछ instances हम देखते हैं where markets were in the bull run. Now, just like that cricket example where different batsmen dominated different decades or eras, different bull runs in the market had a different performer. Okay, so when we say performer in this context, it is different industry or sector which did well in those bull runs. And if you look at this slide carefully, you will see that the bull runs are quite different. So which started with 1990-92, which was the Arshad Mehta bull run. 1991 also saw liberalization. Okay, so it was a historical budget. So the bull run happened. Some of the sectors did well, like public sector banks, cement, etc. 1993-94, foreign institutional investors को बोला गया कि आप इंडिया के बाजार में निवेश कर सकते हो. So a lot of money came in, liquidity came in, market rallied. Right? 98-2000 was the typical tech boom. Every company started adding .com to their name just to give a perspective as if they are also a technology company so that the share price can rally. So this was the tech boom. IT sector did well. 2003-07 again we had global liquidity because emerging countries के बारे में लोगों ने चर्चा करना स्टार्ट किया. ब्रिक्स इकोनॉमी के बारे में लोगों ने चर्चा करना स्टार्ट किया. So India was one of those countries. So a lot of money came in. Infrastructure was the theme. Infra did well in that period. Then 2014-17 we had a mandate, public mandate in terms of elections. We had a government which would run the complete 5 years. So foreign portfolio investors came back saying that, okay, India looks a good story because there's stability in the government. So काफी पैसा वापस आया, बाजार में rally हुई, but this time the sectors were different. So what this slide is telling us is that every bull run was different, okay? And every bull run happened for a different reason. And in those bull runs, every bull run had a different performer, which is a different set of industries or sectors have done well. Now, what is the learning from this? We have already seen in the last few months, markets have rallied, they have bounced back. Today we are at almost 48,000, close to 50,000 levels. Now, some performers or some industries have ensured this rally. So when the COVID thing was happening, you would have found that typically it was pharma and IT companies were doing well. Baki sab nahi kar rahe the. Then the market recovery started. You saw more broad-based participation in terms of sectors and industries. Kafi industries ne participate kar diya. So it is like a relay race. अपनी relay race देखा होगा ना, 4 into 100 मीटर का relay race होता है. तो 4 लोग होते हैं और हर एक इंसान उसमें 100 मीटर भागता है. 100 मीटर भागने के बाद वो बैटन दूसरे टीम अपने टीम मेंबर को देता है. He does not alone run the 400 meters. So same is happening here. हो सकता है this rally which has happened in the last few months was done by one player or a couple of industries or sectors. The next set of rally could be taken up by the next team member, no? So the next set of industries or sectors can take the rally ahead. I'm not trying to say कि market ऊपर ही जाएगा, okay? I'm just trying to give you some perspectives. The other way of looking at it is this: कि large cap ने अच्छा किया अभी तक, अब हो सकता है आगे की तेजी में mid cap और small cap अच्छे कर सकते हैं, okay? So these are perspectives that I want to build around in the sense that this is how things happen, right? So don't get again bogged down कि ये सब अभी खत्म हो गया 48,000 मतलब that's the end, इसके ऊपर नहीं जा सकता है. People have been always proven wrong. Okay, in hindsight ये बोलना बहुत आसान है. I can understand कि जैसे मैं आपको एग्जांपल देना चाहता हूँ म्यूचुअल फंड्स में July onwards people started redeeming the investments. Okay, so in the last 5 months the total redemptions were close to about 27,000 crores from equities, out of which almost close to 50%, about 12,000 odd crores नवंबर के महीने में निकल गए. अब लोगों का साइकोलॉजी कैसा था? And there are nobody to be blamed at, because this is how human psychology works. काफी लोगों ने देखा कि बाजार टूटा था, NAVs कम हो गए थे, लॉस होगा. जैसे ही थोड़ा बाजार ने रिकवर किया, पीपल से रोके निकल जाते हैं, राइट? सो सम पीपल एग्जिटेड इन जुलाई, अगस्त एक्सेट्रा. नवंबर तक बाजार अच्छा रैली हो गया. अब बोले इसके ऊपर क्या जाएगा? तो मेजॉरिटी पीपल came out, so almost 45-48% of the money went out in the month of November. उसके बाद भी हमने देखा दिसंबर में भी रैली हो गया, जनवरी में भी रैली चल रहा है. So in hindsight, it is easy to say कि उन्होंने गलती किया, but at that point in time, they had a very different thought process, right? So what I'm trying to say is don't get again bogged down कि क्या हो रहा है, क्या नहीं हो रहा है. I will come to what is it that each one of us should do as investors, right? Let's go ahead. Now, let us also see that what has triggered this rally in the last few months. Bull rallies तो हमने देख लिए past के, but what is it that has triggered the bull run in the last few months? Some of these points are put here. Okay, I will quickly take you through these points. One or two points I may want to explain. The first is the GDP growth. So economic activity is measured by the GDP of the country. Right? If you look at Q1, which was April, May, June of this fiscal year, financial year, you would see that the GDP number came negative 24%. बहुत ही खराब परफॉर्मेंस था इंडिया का, बाकी इकोनॉमीज के भी खराब थे. Okay, so minus 24% was the GDP number. Because activity नहीं थी, हम लोग सब घर पे बैठे थे. So no consumption, nothing was happening. Q2, which is July, August, September, the GDP numbers improved from minus 24 to minus 7.5%. अभी आप बोलोगे ये नेगेटिव ही है. Yes, नेगेटिव है, लेकिन minus 24 के कंपैरिजन में minus 7.5 is better. More importantly, lot of analysts were estimating कि Q2 GDP will come close to minus 10, minus 11%. Right? But it came as minus 7.5%. It is like this. अभी घर पे बच्चा है, समझो पेरेंट है, उसको पता है कि उसका बच्चा हमेशा फेल ही होता है, हमेशा फेल होता है, पास ही नहीं होता है. तो एक्सपेक्टेशन क्या है कि तो फेल ही होने वाला है, लेकिन उस बच्चे ने पास कर ली, तो घर पे तो पार्टी हो जाएगी, तो वही सीन यहाँ पे हो गया. Expectation was minus 10, minus 11, came minus 7, दो नेगेटिव, better than what people anticipated. इतना सडन मूवमेंट आएगा लोगों ने एक्सपेक्ट नहीं किया था. Despite the economy being in partial lockdown, पूरी तरीके से खुला नहीं था Q2 में, उसके बावजूद it was some good bounce back that we saw. Also, the government tried to bring out a lot of packages. One of these packages is the Atmanirbhar package. आपने सुना होगा, Atmanirbhar Bharat. Okay, along with it, there's a production-linked incentive scheme, which is PLI scheme, which government announced for some sectors initially, and they have now expanded it to 10 more sectors. Now, I will just spend a couple of minutes here, what this can do. And let me tell you, I'm saying what it can do. I'm not trying to say it will do, okay? So what can happen is, if you look at GDP of the country, India का जो GDP आप देखोगे, अगर उसको आप split करके देखोगे, if you go 50 years back, 60 years back, India was a agricultural economy, right? So 1950, 1960 में आप देखोगे agriculture का contribution GDP में सबसे ज्यादा था. Now services industry is the highest at 60%. Agriculture में more than 50% of the Indians are employed in agriculture, but the contribution today is only about 17-18%. तो वो कम हो गया, service industry has picked up. नॉर्मली क्या होता है, एग्रीकल्चर इकोनॉमी से वो मैन्युफैक्चरिंग इकोनॉमी की तरफ जाता है और फिर वहां से सर्विसेज की तरफ जाता है. इंडिया ने इसको बाईपास कर दिया, मैन्युफैक्चरिंग को छोड़ दिया, सीधे एग्रीकल्चर से हम सर्विस पे चले गए. तो मैन्युफैक्चरिंग कभी भी इंडिया में ज्यादा आ नहीं पाया ऊपर. सो द कंट्रीब्यूशन टुवर्ड्स जीडीपी इज वेरी लेस एज फार एज मैन्युफैक्चरिंग इज. नाउ द थॉट प्रोसेस इज दैट आत्मनिर्भर, ओके, एंड द पीएलआई स्कीम is sort of a make in India concept. यानी कि अब बाहर से कंपनियां आएगी, इंडिया में फैक्ट्री एस्टैब्लिश करेगी, and they will start manufacturing in India. Now, what can happen because of this? If there is production that is going to happen, manufacturing going to happen, especially in sectors जो गवर्नमेंट ने अनाउंस किए, जैसे मोबाइल, इलेक्ट्रॉनिक्स, फार्मा, ठीक है, these are high capital, high workforce intensive industries, जहाँ पे काफी स्टाफ लगते हैं आपको बनाने के लिए. So this can create a lot of job employment opportunities. One study which was done by Credit Suisse says that this Atmanirbhar alone can create 22 lakh employment opportunities. Okay, so this can be debatable कि होगा नहीं होगा, that's a different story. But the fact is the thought process is there as far as the government is concerned. So this has also added as a positive sentiment to the economy. The economy जैसे पूरी तरीके से full-fledged काम करना start करेगा, this can contribute to the GDP of the country. That's important. दूसरा, अगर एम्प्लॉयमेंट अपॉर्चुनिटी क्रिएट होगा, यानी कि लोग कमाएंगे पैसे कमाएंगे तो कर्ज भी करेंगे, कर्ज करेंगे तो अगेन आपका कंजम्पशन बढ़ेगा, जीडीपी में बढ़ोतरी होगी. So this is the thought process. This is the kind of effects that can happen. Now the question would be, China के साथ हम compete कर पाएंगे नहीं कर पाएंगे? These are separate issues, which I will not get into too much technicalities. Please understand कि all these will take time to execute. ऐसा नहीं कि गवर्नमेंट ने आज बोल दिया तो कल से सब वाह वाह होने वाले, सब कुछ ठीक तरीके से होगा. It will take time, especially if you want to compete in exports with China. because China के पास infrastructure already बना हुआ है production का. So let's not get into those levels. As of now, look at it from more opportunity to create employment, and this can contribute. Again, it will not happen immediately. It may take some time. Second thing that worked in the favor was India में COVID cases कम होने लगे. अब आप डिबेट कर सकते हो कि हम तो रिपोर्ट ही नहीं कर रहे थे तो कैसे रिपोर्ट हो, तो केसेस तो कम ही होने हैं. So that's again debatable, but importantly India की recovery rate was very good as compared to most of the countries. Vaccine is now a reality. Couple of companies have got the commercial rights to now start immunizing the public, and perhaps in the next few months, reasonably good population should get immunized. Okay, so that also acted as a trigger, because अगर ये कोविड का मामला खत्म हो जाता है तो economy can run at full speed, right? Third, which is very important, is the corporate profitability has shown signs of improvement. काफी quarters से हम लोग everybody was only saying कि profitability नहीं आ रहा है, etc., etc. After so many quarters, there is some ray of hope here that we can see in terms of profitability. Again, one important contributing factor is because of lockdown, everybody was at home. A lot of these companies have done cost rationalization, right? Because आपका travel cost कम हो गया, some daily expenses cost also got reduced. So this has helped in companies having or showing some profitable numbers. Now, this is also important, which is also now connected to the second point, next point, which is low interest rate. Now, for the first time in so many years, we are seeing a regime where we are seeing very low interest rates. And when the interest rates are low, companies, okay, can invest in some capacity expansion, in setting up plants, etc., buying machineries, etc. And then if the production also gets aligned, this can do a lot of good things for the company. Now, this is important, especially for mid-sized companies and small-sized companies, because जब COVID था, so the big companies were still able to manage somehow. सबसे बड़ा झटका हुआ middle companies and the small companies. Now, with the low interest rate regime continuing, and RBI is very clear in saying that at least for the next few months, okay, in fact, even globally, a lot of these central banks have said that they will maintain low interest rates. If this continues, these companies can benefit, because mid company and small companies के लिए the interest cost is a big component in determining the profits. अगर ये सस्ता हो जाता है तो उनका profit बढ़ जाएगा, which is good for these kind of companies. Okay, so and the other side of this is also, as consumers also, if we get low interest rates, we have already seen some activity in terms of real estate showing some signs of pickup. For the first time in so many years, we have got home loan rates which is less than 7%. Right, so all this has been acting favorably. Markets have sort of rallied. So economic activity happened. Rural economy was anyways doing well. Kharif output has been very good. So all in all, these are some of the reasons जिसके कारण markets have continued to go up. One important reason is also to do with liquidity. Lot of money is flown into the markets, and some of these money, a major amount of this money is also come into stock markets. So there's a demand versus supply equation. So demand has gone up, so the prices have also gone up. So let me also put a caution here. Despite so many things which have been favorable, which are showing good trends, the flip side with liquidity is that some of these liquidity can also move out of the country at some point in time. And if that happens, we can expect some minor corrections in the market. Now, when it will happen, nobody knows. How much will be the extent of correction? Nobody knows. But these are factors we need to look at. Okay, but from a long-term perspective, somebody is an investor with a 5-year, 10-year horizon. All these do not matter much. Okay, these are all short-term events, and every time there is some of the event that will keep happening in the market. All right, let's move ahead. Now, if I were to ask this question, February, May, did anybody know that the markets will correct in March? Clear answer is no. Similarly, did anybody know in June that the markets are going to bounce back? Clear answer no. Which means nobody knows what is going to happen. Same is the futuristic also. So if I ask you, what do you think, markets will go up or down? I think both the probabilities exist. Okay, we have discussed that in the previous slide. The favorable things, positive things, indicators are indicating that this trend might continue. Liquidity will also continue for a few more months, which means markets can go up. But I'm putting the word can. If the liquidity goes down, who starts moving out, markets can also correct. So both the possibilities exist. Frankly, nobody knows what will happen. Even the experts don't know. So let me give one instance here. Goldman Sachs and Morgan Stanley, two important investment banking firms, also known for their global research. Few months back, I think April, May, Goldman Sachs came out with a report saying that they are absolutely pessimistic about India. Well, the Indian government is not doing much, not much of stimulus provided. We don't expect India to bounce back. Now, if somebody would have followed them, what would have been our reaction? We would have sold, right? Just as the moment the market started going up, Goldman Sachs came out with a revised note. They said, now we are extremely bullish about India, absolutely optimistic about India. We feel perhaps India is going to be one of the fastest reviving economies. Now, suddenly their stance has changed. Okay, so what I'm trying to say is, do look at business news channels, but do not fall prey to only what they are saying. All right, so nobody knows what is going to happen, and if none of us know what is going to happen, the question again is, what should I do if nobody is telling me what is going to happen in the market, right? So as an individual investor, the question that is coming in front of all of us is, what should I do? Now, when I say do, it is a behavior, right? Do is a behavior. Now, if do is a behavior, so what is behavior? It is what you and I do. And if it is what you and I do, it is an action. If it's an action, it is a decision. And each one of us take decisions every day in our life. Let me give a very simple example. All of you have got this link. Few days back, you might have got this link for today's session, right? So when the link came, you might have taken a decision. Should I attend, not attend? Okay, that decision was taken. So people would have registered. Then yesterday and today, you might have got a reminder, please attend. Now again, you had registered, that time you took a decision you want to attend. Today in the morning, you might have decided, छोड़ो यार, अपना Saturday क्यों बर्बाद करें? ज्ञान कौन सुनने जाएगा? I will not attend. So some people might not have attended. So they have taken a decision. You have attended, so you have taken a decision to attend. So everywhere we take decisions, right? And therefore, now I'm going to get into a very, very different aspect of investment, which is behavioral finance. And this is a topic which I feel is very, very important in wealth creation, and something which is not talked about in detail in India. Okay, so I want your participation for this question that I'm going to ask. Let us see how do we behave. The question is, if I offer you 100 rupees today, and I give you another choice that I will give you 101, but next week, so next Saturday, I will give you 101. Will you choose 100 today, or will you choose 101 next week? So just type 100 or 101 in your chat. And Shoaib will wait for 30 seconds before we take the responses. So just type 100. So, आज या 101 एक हफ्ते बाद आप क्या लेना चाहोगे? सिर्फ उतना टाइप करना. 100 या 101?
100.
Okay.
100. 100. 100. 100. 100.
Okay.
100 today. 100. One person has chosen 101. Two people have taken 101.
Okay. Majorly, you're saying it's 100.
Most people are 100. Very few people have taken 100, 101.
Okay. And again, this is as expected. So I have done this, I've asked this question in so many forums that I've done. I have found that 75, 85%, even 90, 95% of the people select 100. 100 rupees le lete hain, they don't select 101. But let us understand this from a behavior perspective, very important. Now, couple of them, I want couple of them to respond. Agar aapne so choose kiya hai, can you just respond, why have you chosen 100? Only those people who have chosen 100, one or two people can respond. I don't want all of you to respond. Maybe one or two can respond. Why did you choose 100? This is the question. Shoaib, let me know if there are any answers that come up.
Yeah. So
अगर
for
आपने
101 people are sharing the responses.
Okay, what is
They
the
are saying
response?
that next week it's a 52% gain.
Absolutely fantastic. Whoever that person is, absolutely great. So this is precisely the point. So people who have chosen 100, let me tell you why they choose 100. It is because of this. So Hari ने बोला कि मैं आप आपको 100 रुपए देता हूँ. Hari also says I will give you 101 next week. But next week किसने देखा? Who is going to see the next week? Uncertain, right? We don't know what is going to happen in 1 week's time. Let me take these 100 rupees. What I'm getting today. This is called instant gratification, which means तुरंत संतुष्टि. पैसे मेरे पास आ गए, मेरे पास, I feel satisfied. Now, if this was 100, instead of 100, if this was 1,000 rupees and 100 and maybe 1,010 rupees next week, this 1,000 that you get today, what will you do? You will perhaps go and take your family for the dinner, right? Maybe you go and watch a movie. Absolutely. So this is instant because that gives you pleasure, that gives you satisfaction. That's called instant gratification. Now let me ask the second question. The choice, whether you've taken 100 or 101. So if you've taken 100 predominantly, what do you think? This was a logical decision or an emotional decision? This is for people who have responded with 100. Do you think it's an emotional decision or is it a logical decision?
100 because of uncertainty.
So, okay,
it's
uncertainty.
An emotional decision.
Absolutely, very good. So it is an emotional decision, right? That is why I choose 100. अगर मैंने लॉजिक अप्लाई किया होता, लॉजिकल डिसीजन होता, तो जैसे किसी ने बताया 52% रिटर्न, तो मैं 101 सेलेक्ट करता. So 1% I am giving you in 1 week. Today 100, 101 in 1 week. So 1% return in 1 week. If I annualize it, it is 52% returns in a year. और उसको आपने टुकड़ा दिया, बोले 100 मेरे को आज मिल रहा है, मैं ले लेता हूँ. This is how mind works. This is how our behavior is, and such behaviors will impact our investments, right? Because all decisions, right? All right. Now we said that everybody is a emotional being because we want turant santushti, instant gratification. Majority of us, most of the time, take emotional decisions in life. Whether you like it or not, this is the fact. हमको लगता है कि हमने लॉजिकल डिसीजन लिया है, हमें लगता है, जरूरी नहीं कि हमने लिया हो. So most of the time studies have shown that all of us take emotional decisions, and one of those emotional decisions is redemption. Okay, so redemption is also an emotional decision. I'll explain why and how. People who have redeemed, now what was the thought process in their mind? Markets have gone up, ऊपर आ गया, मेरे पोर्टफोलियो में प्रॉफिट दिखाई दे रहा है. आई एम कॉन्स्टेंटली वरीड, hey, what if the markets fall tomorrow? If the markets were to fall tomorrow, profits will come down. Whatever profit I'm seeing in my portfolio will come down. There's also a possibility that the portfolio can get into loss. So there's a fear. So fear is also an emotion, right? So the fear that the markets can correct forces me to take this decision and redeem my investment. Got it? Now let's see what happens when we redeem that investment. So the money comes to your bank account. And then what happens to that money? Do you think you will save that money or you will spend that money? Can a couple of people respond? The money has come to your account. What will you do? Will you save that money or will you spend that money? Give an honest answer. Honest answer, Dena. Any response, Shoaib, you let me know.
Yeah.
Give a honest answer that the money is redeemed, comes to your bank account. What will you do with that money? Do you spend it? Do you save it?
Spend, invest, save,
Spend. Okay.
Spend
Okay.
that money,
Spend.
save. So majority people are choosing spend.
Absolutely. And this is the classic behavior. This is how people behave. Okay. So typically it gets spent. Now, how do we spend it? For the last 10 months, all of us are sitting at home. We are not able to make those high value purchases. We have not been able to do shopping, though we were doing online shopping, but the major shoppings were not done. We were not able to travel outside. We were not able to go on foreign trips, etc., etc. So the moment the money comes, what do? We go and buy a 52-inch LCD, exchange offer by Vijay Sales, or we go and buy a four-wheeler, or if you already have a four-wheeler, we upgrade to a bigger one. car, right? So essentially, we spend money that we redeem. Now, this money that you have invested could be for some long-term goal. हो सकता है आपने रिटायरमेंट के लिए पैसे डाले थे, आपके बच्चे की पढ़ाई के लिए डाले थे, लेकिन आपने पैसों को बीच में निकाल दिया, and you have spent it also, right? So this is what happens. Emotions play a very, very important role in our decision making, right? And this can impact our investments. Now let's see what is the impact of withdrawing prematurely, right? This is an example as an illustration. This is a story of two friends, childhood buddies, Ram and Shyam. Okay. Now both are 30 years old, and the way they work is whatever they decide, both of them do it. So they decide that they are going to plan for their retirement, and their retirement age is 60 years. So 30 साल के हैं, 60 साल में retirement लेना है, तो 30 साल का समय है. So both of them decide to start a SIP in mutual funds, and both of them decide to make the same amount of investment, which is 10,000 rupees every month for the next 30 years. Both of them religiously, diligently invest 10,000 every month for the next 30 years. यानी कि दोनों ने 36 लाख रुपए निवेश किए. Both of them have invested 36 lakhs. Ram does not remove even a single paisa from the investment. He does not do any withdrawals, no redemptions. His value at the end of 30 years, assuming a return of 12% every year, is 3.24 crores. Right? Shyam, on the other hand, is like most of us. Moment there's a profit, he redeems. And what does he use it for? He has put air condition in all his rooms. हर room में उसने air condition लगा दिया. Purchased a bigger 4-wheeler, despite not using it for so many months, still purchasing a bigger 4-wheeler. Home renovation कर दिया, not required, still does it. Assuming the COVID is not there, he does international trips also, etc., etc. So what does he do? Over 30 years period, he withdraws 33 lakh rupees. And how is the withdrawal done? I have given a table for your reference. Okay, it is not done at one shot. In different time periods, he has withdrawn some amount. So net is, in 30 years, he has withdrawn 33 lakh rupees, but he has invested for every month 10,000 rupees. I want you to take a guess. आप लोग ये अनुमान लगाइए कि राम को तो 3 करोड़ 24 लाख मिले, शाम को कितने पैसे मिलेंगे 30 साल के बाद. माइंड यू, उसने एक भी SIP बंद नहीं किया है. This SIP is continued for 36 years. But he did withdrawals of 33 lakhs in 30 years. 30 साल में 33 लाख विड्रॉ किया. आपके हिसाब से शाम ने कितने पैसे बनाए होंगे? What do you feel? Just type it in the chat and then we will discuss. Do you have any responses?
No, not yet. Just a second.
Okay.
People are typing.
Okay.
1 crore.
Okay, 1 crore. Okay.
1 crore. 1 crore.
Okay.
1.5 crore.
Okay.
1 to 2 crore. 50 lakhs.
Okay.
1.3 crore. 60
Oh.
to 75 lakhs.
Oh, 60, 75 lakhs. Okay, great.
Yeah, less than 1 crore.
Less than 1. Okay, fantastic. So thanks again for your participation. Let's see what is it that Shyam will get. Shyam will have got a corpus of 1.28 crores. Ram got 3.2 crores, 4 crores. He's getting 1.28. There's a gap of almost 2 crore rupees. Huge gap. Do you think Shyam will be able to take his retirement at 60? No way. He's fallen short by 2 crore rupees. And who is to be blamed? His redemptions are to be blamed. So the compounding effect is lost. So all of us feel I am only withdrawing 10,000 rupees, 50,000 to nikal liye, kya farak padta hai? But the compounding effect is lost, which I will discuss in my last slide. Okay, that is lost, and the corpus that you accumulate is much lower than what you would have ideally accumulated. Okay, so please bear in mind when you're doing redemptions, all these things you need to consider before you just putting a redemption request. Please remember, putting a redemption request is an emotional decision, right? Let's look at this. Now, if you look at this for 30 seconds, most of us will have a spinning head, okay? So don't look at it in too much details. This is the Chakra view, which we have perhaps seen in Mahabharata, right? So if you look at the right-hand side image, look at the Chakravyu. It is in layers. Okay, it is like the onion layer. एक खिलोगे तो दूसरा layer आता है, फिर तीसरा and so on. So it is layers of soldiers. They are assigned or aligned in such a way that entering the Chakravyu is very difficult. So if you want to enter, the target is to reach the red spot. The red color is what is the target. You have to reach the center of the Chakravyu to fight. But entering itself is so difficult because you have to fight and go through so many layers of soldiers. And when you're going to fight with so many layers of soldiers, very high tendency or possibility that you will die even before you reach the center. But Abhimanyu knew a shortcut to enter the Chakravyu. So while he was in his mother's womb, okay, Arjuna was telling this to his wife. He was listening to all this. So उसको पता था चक्रव्यूह में shortcut लेके कैसे घुस जाना है. So he knew an entry point. So he did not have to go through all this. But unfortunately, he did not listen as to how do I come out of the Chakravyu. और उसमें वो फंस गया. He got killed in that battle inside the Chakravyu. Mind you, he was only 16 years old. Very premature death. Reason, he did not know how to exit from the Chakravyu. Entry पता था, exit नहीं पता था. अभी आप बोलोगे इसका इन्वेस्टमेंट्स के साथ क्या कनेक्शन है? कनेक्शन है. म्यूचुअल फंड में निवेश करना बहुत आसान है. आपको एप्लीकेशन फॉर्म फिल करना है, डू दी केवाईसी स्टफ, योर इन्वेस्टमेंट स्टार्ट्स. अब आप बोलोगे एग्जिट भी बहुत इजी है सर, रिडेम्पशन तो हम डालते रहते हैं, ऐप में है, बटन दबाओ, रिडेम्पशन हो जाता है. ऑपरेशनली इट इज वेरी इजी. बट इफ यू डू रिडेम्पशंस प्रीमेच्योरली like what Abhimanyu did, you will also kill your investments prematurely, and that is going to impact you in the long term. That we have already seen through the illustration of Ram and Shyam. So be very careful. Redemption is an emotional decision. Your end exit should also be planned. It cannot be an instant decision. Chalo aaj daba dete hain button. No. You have to plan your entry. You have to plan your exits. That's very, very important. That is what Chakravyu tells us. All right. Let's go ahead. Now, despite all this that we have given, so much of gyan to all of you, you still feel, nahi, ye sab to theek hai, I will redeem the money. Okay. Now, if you redeem the money, what will you do with the money? Now, you might say, I will keep the money in my account. And I will wait for markets to correct. And when markets correct, I will come back. This is typical standard investor response. And I'm speaking purely out of experience. Okay. So let's see what you do. If you redeem the money, where will you keep the money? You will keep it in your savings account or maybe do a fixed deposit. Savings account is giving 2.7 to 3.2% returns. Let's ignore the few banks which are offering 6-7%. So there are conditions applied. We will ignore that. The second thing you can do is do a fixed deposit for 1 year because you are anticipating markets will correct in the next 1 year's time, possible. So you go and do a fixed deposit. SBI is currently offering 4.9% rate of interest on its 1-year FDs. Okay. Now, as I already told you, RBI has cut interest rates drastically, and RBI is very clear. At least for the next 6 months, the chances of interest rates going up is very, very low. In fact, as good as zero. Which means this low interest rate will continue for some more time, and your money is going to be parked in these low interest rate giving instruments. On the flip side, you have equity markets which are continuously rising. Okay, so again, you're worried as to what is to be done because a lot of liquidity is coming into the market that's keeping the market at high levels and at elevated levels. And as long as this liquidity keeps coming, which again we anticipate could continue for at least 2 more months, markets will continue to remain at high levels. So again, we are in a quandary. What should we do? Is taraf aaye hain, to kam milega rate of interest, so there's an opportunity loss. If we continue, there's a fear that the markets might fall. Okay, there is also an opportunity loss. And for all those people who decide that I will not spend the money after redeeming, I will keep my money in the savings account, and definitely I will come back to markets in the next 3-6 months time. Let me tell you, 95% of those investors who say that jab bazaar tootega main वापस आऊंगा, वो नहीं आएंगे. Answer this question to yourself. Today market is at 48,000. Assuming the market corrects by 10%. Market comes to 4,000, 43,000. Will you invest? आप खुद को जवाब देना. Don't put it in the chat box. Give yourself this response. Will you invest if the market corrects by 10%, comes to 43? Or will you still wait? Okay, you will still wait. Then another 10% correction happens, 43 becomes say 38. Will you invest? Guaranteed you will not invest. Why? Because you're seeing markets are falling. Up the next emotion is working in your mind, or to take a, let me buy when the market is bottomed out. Nobody has been able to do that. If you can do that, please do it. Right? So you are in a catch-22 kind of situation. You don't know what is to be done. And if you take the decision to redeem, with the thought process that I will come back, I can tell you, you'll never come back. So what is the solution? Let me tell you. So what we strongly suggest and recommend is this slide. So left-hand side, I'm saying do not redeem. Very clearly, what are those situations or what are those set of investors who should not redeem now? What are those set of investors? If you do not need the money today for any of your goals. Now don't tell me, sir, while you were speaking, I created one goal. I want money immediately. No. If you have not decided for any goal, then don't remove that money now. If your goals are 3 to 5 years ahead, अभी कोई गोल नहीं है आपका, 3 से 5 साल के बाद ही के गोल्स हैं, don't worry about it. Don't redeem your investments. Do not redeem just because market is at an high level of 48,000, 50,000, right? So this is for people who are not having any goals in the immediate future. What about people who have got some goals? Again, I am saying don't redeem, do a rebalancing. What is that rebalancing? Let us understand. Who are the people who should do this rebalancing from equity to debt? So rebalancing is essentially switching the money from equity to debt. Okay, not bringing to your savings account. वहाँ पे आया तो गया, स्वाहा हो जाएगा पैसा. It will never come back to markets. So rebalancing is for people who have got immediate financial goals. Next 6 months, 1 year. I am going to retire in the next 1 to 2 years time. I am worried next 2 years if markets fall, my corpus can come down. Yes, genuine worry. In those cases, we suggest you do a rebalancing from equity to debt. Do a switch from equity mutual fund to debt mutual fund. Okay, if you have gone in the next 1 year, child's education, higher education, you had planned for it, you needed money, that money is already created. Okay, do a switch to debt mutual fund. Your goal is already achieved. You wanted to retire 2 years back, but because of the market rally, your corpus is already accumulated. Fantastic. Do a rebalancing, keep it in debt mutual fund. So do not redeem. Why I'm saying do not redeem time and again is because the behavior plays an important role. The moment the money comes to your savings account, it is gone. It will never come back. You will end up spending somewhere else. Instead of that, do a switch to a debt mutual fund. Okay, so our team members can guide you how that can be done. Okay, but for God's sake, for your benefit, okay, and for the benefit of your long-term goals, do not redeem. Do a rebalancing if at all you want to do. Right? Let's go ahead. So somebody might say, all this is fine, sir. I will not redeem. Okay, I will not spend. But my SIPs are continuing, and my SIPs will be going in this market, and markets are at high level. So my NAV is high. I will get less units, sir. This will impact my long-term goal. Right? Common question again. Let me address this with one illustration. This is again an illustration of 3 friends. One of them is called Mr. Lucky. Second one is called Mr. Unlucky. Third is called Mr. Smart. Okay? All of them 3 are good friends. And I'm going to take you back to January 1999. 1st of January 1999. So we have also just started a new year. Many of us take resolutions that I will do this, I will do that. These 3 friends also took a resolution in January 1999 that they will start investing in stock markets. Okay? And they decided that whenever they invest, they will invest 1,000 rupees every day, whatever that number of days might be. Whenever I invest, I will invest 1,000 rupees. So Mr. Lucky, Mr. Unlucky, and Mr. Smart decide to invest in stock markets. For the sake of simplicity, let us assume that they invest in the Sensex, right, which is the index. So Mr. Lucky says, मैं तो रोज निवेश नहीं करूंगा. My name is Lucky. So I will select those days when markets fall. And my investments will happen only on those days. Okay. So he identifies those 1,000 days when markets have fallen. Best day to invest. So he invests 1,000 rupees for 1,000 days. So 10 lakh rupees invested. What is the value of his investment on 27 November 2020? It is 56.79 lakhs. If you convert this into annual returns, it is 12.65%, right? Let's look at Mr. Unlucky. Mr. Unlucky says, I will also invest only for 1000 days, but his name is Unlucky. Kya करें? Okay. Unfortunately, all his 1000 days investments happen on the day when markets are the high levels. So जब भी बाजार ऊपर गया उसी दिन उसका investment हुआ है. Same like us, no? Our SIPs go. We don't know the day when the SIP is going. We don't know whether the market will be low or high. But in this poor guy's case, it happened on worst 1000 days. All those 1000 days when he invested, markets were high. So he invested 10 lakh rupees. His market value on 27th of November is 55.9 lakhs. What is the difference? Hardly 80,000 rupees difference, right? Return 12.44. Hardly any difference in returns between the lucky guy versus the unlucky guy. So the lucky guy is supposed to be getting more returns, but that does not happen. So unlucky guy is like the question that we are facing. See, sir, my SIP will go when the market is high. What has happened? Nothing has happened. Third guy is Mr. Smart. He says, come what may, I will invest 1000 rupees every day. कुछ भी हो जाए मैं हर दिन 1000 रुपए डिसिप्लिन में मैं निवेश करते जाऊंगा. So he invests 54.5 lakhs because the number of days he is investing is higher. His value is 2.65 crores. His return is 12.67%. Hardly any difference between the returns of all these three individuals. So what I'm trying to say here is, do not try to time the market. कि जब बाजार सस्ता होगा तो पैसे निवेश करेंगे. हमने देख लिया एग्जांपल, कोई फर्क नहीं पड़ता है. So simpler way is to keep on investing, even if your SIPs are continuing. Please continue with your SIPs. In the long run, they do not matter because आपका averaging ऐसे भी हो जाएगा. When the market comes down, you will end up buying more units. So don't worry about all that. Continue your SIPs. There's another individual who says, "Sir, I want to invest in equities, but I'm worried because market is at an all-time high. Whenever market corrects, I will start a SIP. Okay? Or I will start a SIP in the next 3 to 6 months, whichever is earlier. Either I will start in next 3 to 6 months, or if the market corrects before that, I will start my SIP, right? So let's understand this with another example. So for this, what we are suggesting is to do a systematic transfer plan. Very simple. Systematic transfer plan is like SIP. The only difference is your money will go from one mutual fund into an equity mutual fund. So typically the base mutual fund is your debt mutual fund. So what do? I put a lump sum amount into a debt mutual fund. From there, I start a SIP into an equity fund. In a normal SIP, what happens? My money is lying in the savings account. And from the savings account, my SIPs are going. STP में आपका पैसा debt mutual fund में जाएगा. वहां से आप systematically equity में transfer करो. That's called STP. Now let's understand this STP concept with an illustration. This is an example of Mr. and Mrs. Snehal. नाम के हिसाब से Snehal means happiness. Okay, but in their life, they are very unhappy. In fact, they always constantly fight against each other. Okay, and both of them have a different view of opinion all the time, even in investments. So Mr. Snehal says, I want to start the SIPs, but I have got 3 to 6 months time before I start the SIPs. So what does Snehal do? He invests 10 lakh rupees in ultra short-term fund, which is one of the categories of debt mutual fund where you can park your money and then from there you do a systematic transfer to equity fund. So he does 10 lakh rupees of investment on 10th of September 2018. And from there he does a SIP, which is a STP in this case, 10,000 rupees every month into a mid-cap fund. Okay. What is his return? As on 27 November 2020, his return is 9%, okay, per annum. Mrs. Snehal says, I will go the traditional way, which is keep my money in a savings account, do the SIP. So Mrs. Snehal has kept 10 lakhs in the savings account. Same day, 10th September 2018, she also kept the 10 lakh rupees in savings account. She also started the SIP into mid-cap fund. Now, what is her return? After 2 years, 6.5%. So what are we seeing here? That a STP tends to do better as compared to conventional traditional SIPs. Okay, it is also SIP, but farak hai ye ki you're doing from a base mutual fund, which is typically a debt mutual fund. So the debt mutual fund like ultra short term can fetch you better returns than your savings account. So till the time it is lying in your ultra short fund, you get better returns than your savings. And as and when the requirement is happening, the trigger goes, automatically the money gets transferred to your equity fund. So this is a strategy that we want people to employ. In fact, lot of investors are doing this, moving from traditional SIPs to STPs. Okay, so keep your money in an ultra short fund, like an Axis ultra short fund. Keep it there. It's a low risk product. Keep it there. Do a systematic transfer to equities. Right. If you're not very sure of what is going to happen to the markets, keep this money in an ultra short. So, for example, you want to invest in the market, but you're worried about the markets at high levels. Keep 10 lakhs in the ultra short. If there's a minor correction to the extent of say 5-7%, shift 1 lakh rupees into equity fund. Another 5% correction, shift another 2 lakh rupees to equity fund. But if you keep this in your savings account, you will consume it. कहीं ना कहीं तो पैसा निकल ही जाएगा, आपको यह मालूम भी नहीं पड़ेगा. So better park it in ultra short. Whenever you want to shift it to equities. Okay, I think this is the fair solution that we have suggested, right? So this is my final slide. Whatever we have discussed, okay, very, very important slide for wealth creation. What is this slide talking about? It's a very simple formula which all of us have learned in school, but many of us have not realized its importance in the investment world. So this is the compound interest formula, Byaj per Byaj, okay? So we look at this formula, we have P. P stands for the amount that you are investing. R is the rate of return that you expect from your investment. T time stands for the time period. कितने समय के लिए? A is the amount you will generate, the future value. So if you look at it, most investors tend to focus on R, which is the rate of return. Now, is the rate of return in your control? It is not in our control. Because I don't know what I'm going to get in terms of return. It's not a fixed deposit, right? So rate is not in your control. We tend to focus most on the rate. Okay, and what do we ignore? We ignore T, which is the time period, which is one of the most important element. Longer the time period, more is the compounding effect, more will be your future value. And we saw in that illustration of Ram and Sham, how because of withdrawals, your compounding gets lost. P is the amount that you're going to invest. This is also in your control. So I know what I'm going to invest. I know I can invest 10,000 rupees every month. So that is in my control. Time is in my control. I know I want to invest for 15 years, 20 years. Don't bother about R. It will come. Getting it? So with that, I want to end my session. Thank you all of you for your time, for your participation. If you have any questions, you can post it. I think Shoaib would have already got a lot of questions. We can start taking questions in a couple of moments. So thank you all.
We have many questions, Hari. To all our participants, we will not be able to answer all the questions due to shortage of time. We have taken note of the questions, and whoever we have not addressed today, our team will be getting in touch with you. We'll try and do our best. Okay. The first question from our investor today is, should we invest in your banking and PSU debt fund? What are the prospects for this fund in the year ahead?
Okay, so banking and PSU fund is a debt fund. As the name suggests, this invests in banking and public sector unit instruments. Okay, so for example, it will invest in corporate bonds and debentures of public sector companies and public financial institutions and instruments of banks like a certificate of deposit. So from a credit perspective, this is a very good fund because even in our portfolio, if you look at it, we run it as a 100% AAA portfolio. When I say AAA, it means the highest credit quality. So the credit risk is very, very low, or as good as no. Okay. So currently, I think we are running about 89% in corporate bond because we're getting slightly better returns there. So 100% AAA portfolio. If the question is for 1 year perspective, yes, you can definitely look at it. But if you're looking at beyond 1 year, I can also recommend some funds, like Axis Dynamic Bond Fund, which also runs a AAA portfolio with a longer time period of investment. So if you're investing for 5 years plus, you can also look at Axis Dynamic Bond Fund, which is expected to do better than this PSU banking PSU fund. Okay. So I think that answers your question.
Our second question is from
sure, just a moment.
Yeah.
Some internet issue. Let me just. Yeah, sure. You can. Yeah. seems to be okay now. Yeah.
Okay. Our second question is, one of our investors have asked that I have invested 10,000 in your Axis Blue Chip Fund. Should I keep it for long term or short term?
Okay, so the question seems to be a lump sum investment if it's not monthly. So obviously, because it's an equity fund, it's a blue chip fund, so large cap fund, investing in the best 100 companies. Equity means long term. And when I say long term, the definition is minimum 3 to 5 years. That does not mean if you have invested in this fund, say 3 years back or 5 years back, you say, okay, you said 3 to 5 years, let me redeem. Don't redeem it. You can continue the investment for your long term, right?
Okay. Next question is, an investor is seeking ideas for investing for regular income.
Ideas for regular income.
Correct.
Okay, so for regular income, there are traditional investment, but in the mutual fund space, what we strongly recommend is, so we know what is SIP. Okay, SIP, you keep investing the money every month. There's a concept in mutual fund which is called as SWP, which is called as systematic withdrawal plan. So you systematically withdraw the money. So let's take a hypothetical example. I am a retired person and I have, say, a corpus of 1 crore rupees, but my income has stopped. My expenses are going to continue. So I need money which is going to take care of my monthly household expenses. So I put this 1 crore rupee in a debt mutual fund or maybe a hybrid mutual fund. Okay, so we can look at an Axis short-term kind of fund, where we park the money. And then I do a systematic withdrawal from this fund. So let us assume I need 25,000 rupees every month to take care of my household expenses. I start a SWP, 25,000 rupees. On the specified date, 25,000 rupees will get credited to my account. How will that happen? Units which are worth 25,000 rupees will be redeemed automatically on that day. The 25,000 rupees will get credited to my account. So this can be done every month. You can keep on doing this. The advantage with doing SWP is because your money is going to be parked in some mutual fund, which could be hybrid or a debt mutual fund, there's a potential capital appreciation that can happen. On the other hand, if I keep my money in traditional investments like post office monthly income schemes or maybe a senior citizen savings scheme or even a fixed deposit, I will keep getting the regular income. But at the end of the maturity, I will only get back my 1 crore rupees, which is the principal amount. But in a mutual fund, you also have a potential to earn better returns and your capital can also move from 1 crore to maybe 1.3 crores, etc. But be very careful about the fund that you select. Normal suggestion is don't get into pure equity funds for doing this SWP because equities are volatile. So be mindful of it. Typical suggestion is go to debt mutual funds or to a hybrid category of mutual fund. Okay.
Okay. Our next question is from an investor who wants to do additional lump sum amount over and above the current SIP. But looking at current market scenario, it looks quite risky. Therefore, he needs guidance on where to invest: debt mutual fund, gold, fixed deposit, or equity mutual fund.
So SIP is continuing. He wants to do a fresh lump sum. Is the question, right?
Correct. Right.
Okay. So as we discussed in our presentation, if you want to do lump sum, and the obvious question is, I'm scared of the markets now because markets are run up quite significantly. So park your money in a ultra short-term fund like the Axis Ultra Short-Term Fund. As and when you feel that's the right opportune moment to shift it. So I gave the example of 5% market correction. So you can set your benchmark 5%, 8%, 10%. As and when that correction happens, you do a staggered investment. You pull some money out of your debt mutual fund, put it into equities. Don't put it at one shot. Put it staggered in a next 6 months to 12 month kind of way so that amount gets invested in equities over the next 6 to 12 month period. I think that's a fair suggestion at this point in time. Let your SIPs continue. Okay. Don't stop your SIPs. We already seen what is the impact of stopping SIPs and withdrawing.
Okay. Our next question is whether debt fund is safe in current scenario for lump sum investment with moderate returns.
Debt fund is safe. Yes. Okay. So debt funds, there are various categories of debt funds. if you go by SEBI categorization, there are 16 set of funds that are available for investment. Now, it depends on you as an investor what kind of fund you select, okay? Because there are risks in debt mutual funds also. Let me put it quite bluntly here. So what you select is important. So one of the easiest way of selecting a debt mutual fund is to match your investment time period with what is called as a duration of the fund. So every fund has what is called as a Macaulay duration. You match the time period with the duration of the fund. So for example, I want to invest for say 6 months or say 6 to 9 months kind of time period. So what can I do? I can go to the mutual fund. I can get to know what is the modified Macaulay duration of the fund. So I will select a fund which has a duration which is same as my investment time period. So my investment time period is 6 to 9 months. So what is that fund which has a duration of 6 to 9 months or 12 months? So I find that there's a low duration fund that is available. That's a category. So I can put my money in a low duration. This is one of the simplest way to select a mutual fund for investing in debt. Okay, but mind you, we should also look at other aspects like where is the fund investing, what is the credit profile of the fund. So for example, if I want to invest for 5 years plus, so I give the example even when I was discussing the previous question, that if my time horizon is 5 years plus, I want to put a lump sum investment, I can get into certain funds like a Axis Dynamic Bond Fund. Okay, which is again a AAA portfolio that we run. Very simple strategy that we follow. It's a good fund to invest for 5 years plus. You will get better returns there. You can expect better returns there. If on the other end, I can take more risk. Okay, as an investor can take more risk. I can also get into maybe a strategic bond fund or maybe a credit risk fund. But mind you, when you're coming to these kind of funds, which is credit risk and strategic bond fund, you need to give enough time. You cannot come with a 1 year horizon or a 2 year horizon. You need to have minimum 3-5 year kind of horizon. Right. So simplest way, match the investment time period with the duration. The people from our sales team can get in touch with you and actually give you the right suggestion in terms of which funds can match, what is the kind of fund which will match with your investment time period.
The next question is, which fund should I invest with a 5-year perspective? Should it be a multi-cap, large cap, mid-cap, or large and mid-cap?
Okay, so now this is a very typical question that I keep getting in a lot of these forums that I do. My premise is, I always start with this, that if I'm a retail investor, I want to do wealth creation. Okay, I want to do wealth creation. Now, why do I need to do wealth creation? Because I have a lot of financial goals in my life. So I have my daughter's education to be funded. I have my own retirement to be taken care of. I want to do some international trips, etc., etc. So all these requires a lot of money, and for which I would need to make those systematic investments, which is SIP. So my first question always is that, what are your financial goals? Two, when are these financial goals expected? So my daughter's education, my daughter is 11 years old now. She will go to higher education at the age of 18. So I've got 7 years time left for that. So when are these goals going to happen? My retirement is maybe 20 years down the line. So I need to have all these numbers with me before I take that investment decision. For the HNI, it doesn't make too much of a sense because HNI has already created the wealth. But for majority of retail clients, wealth creation is the main objective. And why do we do wealth creation? For achieving those financial goals. So frankly, from the question, I don't know what is the objective behind this, but let me put this in perspective. Whether it is a large cap, mid cap, or a small cap. So one option is, if your time horizon is 3 years plus and 3 to 5 years plus, only then you should come to pure equity funds. Now within pure equity, if I have a horizon of 3 years plus, I can come to large cap. 5 years plus, I can go to mid caps. 8 year, 10 years plus, I can also come to small caps. So I can invest in 3 different set of funds. The other way to look at it operationally, which is much easier, is to come to a multi-cap kind of fund. The multi-cap fund is a fund which will invest in large cap, mid cap, and small cap. The fund manager will decide what proportion should go into each of these categories. So I, as an investor, don't have to really worry about, oh, is the large cap already overvalued? Is the mid cap undervalued? Is the small cap undervalued? So is it a good time to move to small cap? I don't have to worry about all these things. Let the fund manager take care of all that. Okay, so you can look at a multi-cap. So we have Axis multi-cap fund, which is available. Come with a 5-year time horizon. This multi-cap fund, which will have a less risk as compared to pure mid-cap and pure small-cap fund.
Our next question is, should we wait for another fall before investing, especially in mid cap and small cap?
Okay, I think this has got addressed as part of the presentation as well. Nobody knows, frankly, whether the markets will correct. If at all it corrects, by what percentage it will correct, when it will correct. So if you want to wait, I have already suggested you can do a lump sum investment into ultra short fund, Axis Ultra Short Fund, then do a transaction into equities. That is feasible, right? So small cap, mid cap, again, my question is connected to the previous answer. What is the objective of investment? If it's linked to your goal, follow the timelines of 3 year, 5 year, 8 year kind of thing, or you do a multi cap.
Okay, we have a question which says, what is the secret behind the market high, and should I invest in the current market?
So I think again this is got addressed. If you want, I can quickly go through that slide. If somebody is interested as to what is the secret behind the markets have gone up. So I've addressed those 5 points along with liquidity. So I think that question is any which is got addressed. So these were the 5 points which I had suggested. So see, purely more from a sentiment perspective, as I said, the child is expected to fail, but he clears the examination. So that's a reason to celebrate. That is what happened as far as GDP is concerned. Expectation is that going forward with economic activity becoming normal, the GDP numbers should start picking up. Okay, COVID we have already discussed will also add as a fillip because if people are immunized, they are free to move out. The activities can go up. Profitability has shown positive improvement. Hopefully, this will continue because this time around it is more from a cost rationalization perspective that has happened, and we hope that most of these companies will continue to have those cost rationalizations. Some amount of costs will go up as people start going back to offices. The transportation costs and some overhead costs will go up, but we still feel that most of these companies will try and keep it under control. Low interest rate regime we discussed will also perhaps continue at least for the next 6 months, as stated by RBI. Even globally, central banks have committed that they will keep interest rates low, which means enough liquidity is going to come and flow into the markets. And if the liquidity continues, markets can remain at elevated levels.
We'll be taking up 2-3 more questions. The second, should I invest in the current market?
So I think that has already got addressed. We have already discussed that. You can invest if you want to do a SIP and your time horizon is 5 years, 10 years, 15 years, 20 years. Bindas, you can start a SIP even now. No worries at all. Okay, no worries at all. As long as your time horizon is longer, as long as you're going to start SIPs, you don't have to worry about all these factors. You can start anytime. Anytime is the best time to start SIPs. Okay. 2, if you want to do lump sum investment, you're worried, do a staggered investment as I discussed, keep it in ultra short term, move it to equity funds. Are there more questions, Shoaib?
Hari?
Yeah.
Your voice is breaking.
So are there more
questions?
Could you
just repeat?
So I was saying that if it's SIP, then you don't have to really worry about what the market is. Any time is a good time to start SIPs. As long as your time horizon is 5, 10, 15 years kind of horizon, don't worry about timings. Just blindly start the SIPs. Okay. If you're making lump sum investment, you're worried about market, as we suggested, keep it in an ultra short-term fund, stagger your investment into equities. Okay. That's one way that you can look at doing it.
Okay, we'll take 3 more questions, Hari.
Okay.
So one question is, shall I redeem mutual fund based on for profit booking?
Okay, so again, I would want to reframe the question. Instead of redeem, let's look at it as a rebalance. I discussed this. Don't redeem. If you redeem, it goes to your savings account. That money will get spent. If you have got goals which are immediately lined up in the next 6 months, 1 year, 2 years, only then you look at even profit booking. If at all you want to do profit booking, do the profit booking, switch to a debt, put the profits into a debt mutual fund. Do not bring it to your savings account. If it comes, it is going to vanish in the next 3 months.
Okay, next question is, can you shed some light on Axis Global Fund Alpha, and how good is it to diversify one's portfolio?
Global Fund, Global Fund of
Axis
Fund.
Global Fund Alpha. Yeah,
Okay.
Global Alpha
Okay.
Fund.
Okay, it's a fairly good question. Before I come to the Global Fund Alpha, I would want to spend a minute on explaining why global investment is also important. Now, one of the other important element as far as investment and wealth creation is concerned is what we call as asset allocation. Okay, so asset allocation is very simple. It is like your thali system. When we order a thali in a hotel, we get two chapatis, two rotis, okay, whatever it may be, depending on which region you order the thali from. You get rice, you get a dal, maybe curd, you get a pickle, you get two vegetables, you get one fruit, one sweet dish. So essentially, you're getting a balanced diet. So you have protein, starch, carbohydrates, fats, everything is given to you in the right proportion. Same is the case with wealth creation. Asset allocation is nothing but investing your money into different asset classes in the proportion which is suitable for you as an investor. Now, what are the three common asset classes? One is equity, the other is debt, third is your gold. I think these are three asset classes which majority of investors can definitely invest in. And all these are available through the mutual fund stable itself. You don't have to look at somebody else or no scout for some other investments. All these three are available in mutual fund itself. Fourth, within equity, I can still diversify. I can get into large cap, I can get into mid cap, I can do small cap, or I can do that multi cap or a thing. One thing that we can all do is that we can take some exposure to global investments. Okay. Now, why this is important? Because one, it gives you more diversification. And the objective of asset allocation is to minimize your risk. Okay. So when I invest in international stocks, studies show that there is a very low correlation between Indian markets versus international markets. So what do I mean by this? Is that if Indian markets fall, not necessarily that the global markets will also fall. Perhaps they might do better. So if I have a cushion, so if I, for example, I have 100 rupees, I had invested 100 rupees only into pure equity, and markets were to correct by 10%, my 100 becomes 90. On the other hand, if I had done a asset allocation, which is 100 rupees divided 60, 70 rupees into say equities, 20 rupees into debt, 10 rupees into gold. So I'm diversifying. Typically, when equity falls, debt tends to do well. And within equity, when Indian markets don't do well, typically international markets do well. So I get some cushioning effect. So my overall portfolio does not get severely impacted. So that's the objective with which you should invest. Two, there are enough opportunities globally available where I can also try to generate some better returns than what I can do in Indian markets. At no point in time we are trying to say that Indian markets are not good. It is purely from a diversification perspective. To the extent of 10% of your portfolio or 15% of the portfolio, you can take exposure to global stocks. Now, coming to the Axis Global Fund of Fund, this is a fund which is a fund of fund in the sense that we take money from the investors in India and we directly put this money in an existing fund globally. And the fund manager there is managing that fund. And they will invest in about 40 to 60 stocks. Typically, these are large cap stocks that they will invest. But the important thing is this fund will diversify across regions. It is not specific only to US. Okay, it is going to diversify across region. It will invest in US, Europe, wherever there are opportunities for investment, it will seek those opportunities. It can even get into emerging markets, including China. Okay, so this is an important differentiation as compared to a lot of other funds which are available, which are typically US dominated funds. So this fund gives you diversification in the real sense, global diversification in the real sense, because you are diversifying across geographies. Right? I hope that answers the question, Shoaib.
Yes. Okay. We'll just take one more question and
Yeah.
then we'll end the session.
Okay.
So our last question is, every individual wants to buy a home or flat. Please guide at what stage one can think to buy it and how to plan it and invest for it to reduce the interest burden.
Sorry, Shoaib, you'll have to repeat the question. I missed
Yeah.
your initial sentence.
So every individual wants to buy a home or a flat. Please guide on when one can think to buy it and how to plan and invest for it.
I think you should buy a flat the moment you're ready to buy it, right? That's on the lighter side. Typically, there are two ways of looking at it. I don't know, I'm making an assumption here that if you're going to take a loan to buy the property, so 80-85% typically gets funded by the finance company, housing finance company. 15 to 20% is what would be your down payment. Now, I don't know what is your time period of buying a house. So let's assume hypothetically that you want to buy a house in the next 3 years. Okay, so let's assume that the cost of the house is 100 rupees. So obviously, it's going to inflate at some percentage in the next 2-3 years. Let's hypothetically assume it's still 100 rupees after 3 years. Now, out of 100 rupees, 20 rupees I would want to contribute as a down payment. 80 rupees I can take it from the housing finance company. Now, to plan for these 20 rupees, I can start a SIP in a debt mutual fund. Why I'm saying that? Because your time horizon in only 3 years. Somebody wants to buy it for 5 years, 7 years, 10 years later, can actually do a SIP for this down payment contribution for that time period, 7, 8, 10 years. Okay. Now, assuming that's a 3 year, I don't want to take equity exposure. I would want to do a SIP into a debt mutual fund. So this is one way of looking at it. If you're going to take loan, the other way is if you do not want to take loan, which is you want to do a complete 100% self contribution, then you will have to accumulate that money. So if it's going to cost you 2 crore rupees, you have to accumulate that 2 crores, whatever that time frame is. So just to give you one thumb rule information, if I want to accumulate 1 crore, I've got 30 years, so rather not 30 years, let's keep it 20 years. If I've got 20 years in which I have to accumulate that 1 crore rupees, and assuming that I can get 12% returns on my investment, I will have to do a SIP of 10,000 rupees every month. Okay, so 10,000 every month for the next 20 years, you should reach 1 crore. So if I want to do a complete down payment and buy the property. Now this is up to you. I feel the question is not complete, but this is my 2 thoughts, in terms of how this can be done. As far as reducing the cost of interest, I am not very clear as far as what that question is asking. Today's market offers you a very relative low rate of interest as compared to what was there as far as housing loan is concerned. 2 schools of thoughts here. A lot of people say don't buy a property, okay, or if you want to buy, start a SIP for 20-25 years, by which time that money would have accumulated, you just go and straight away buy the property. So in that case, you completely do away with home loans. There's no question of interest rate as well. So as I gave the example, 1 crore, 20 years, 10,000 rupee SIP.
Okay, I guess we'll end the session today, Hari. Thank you so much for your
Thanks.
time. And
thank you all of
everyone.
you. Yeah.
Thank you everyone for joining us today. And we hope that this session was helpful. Hari, if you want to give any concluding remarks.
No, thanks all of you for taking time out on Saturday. I hope the session was interesting for all of you, especially for a lot of retail clients. Wealth creation is one of the most important aspects, and I hope we have been able to do justice to that topic. And I hope all of us also know by now that what is it that we are supposed to do? Should we buy or should we buy? Now I'm saying bye-bye. Thank you all of you.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.
Thank you, everyone.
Aspect, and I hope we have been able to